All right, I want to document this trade idea here. This particular setup and system of trading is different than the Fibonacci. Not too much. You can still find Fibonacci levels, but it requires a much more tolerant and wide stop loss, letting price move freely and having certain key areas of support and a resistance to use multiple accounts. So if I have 5 Apex accounts, I think my max on this idea is going to be 3 of those. So that way, if I take a loss, it'll only be in 3. Maximum loss per account, $250. And it's based on directional trading. Which way do I think the market's going? So here in gold, we think the market's going to go up. And we think that we have support levels identified enough to where we can set in certain buy levels. Let's look at the 15-minute chart here. Here's the 15-minute chart. You can see it's very, very bullish. And what we're doing here is we're looking at key levels to buy. And a minute ago, it was in this kind of like this little bull pattern, a bull flag pattern. So I wanted to buy in this zone, look for it to go back up and stop out if it broke the pattern. That was my first trade. And that's what we did. We took a loss on that. And then I said, I still believe in the strong move up. So where are the Fibonacci levels down here that I can do my next trade? And so we buy at a Fibonacci level with a stop loss at another Fibonacci level, where I buy at that Fibonacci level after stopping out on this account. You got to understand, I'm stopping out on one account, I'm entering in on the second account. At that stop loss, we have another Fibonacci level where we will try it one more time and buy at the stop loss of the second account. So as we stop loss on the first account, limiting our risk, not blowing the account, not adding to a losing trade. You could say this is a way of adding to a trade without adding to your loss, because you have multiple accounts. You're not taking a big hit on any one account. You're limiting your risk to whatever it is. Mine's 250. And you're not going to lose more than 250 on this account, or this account. If all 3 fail, you have a very limited risk on all 3 accounts, and you had 3 tries at 3 significant areas to see if it's going to work. If they all fail, no problem, that happens. And you have a very limited risk on each account. So here's what we did so far on this. Let's take a look at it. The first trade idea that I had was in this account here. Now you see PA, that means that's my paid account right here. These are all my paid accounts. Like I said, it broke right here and I got out of that trade. So this particular account was a loss. My third account was a loss. So I had a loss in this account. I entered in up here, actually, and I stopped out when it broke that structure. When it broke that structure, I entered in a different account, which would be account 7, which you see right here. We entered in right here, right before the other one stopped out. Okay, so now it almost stopped me out on the second one here, as you can see. It almost stopped me out on the second one, but it didn't. It started rolling back up to our entry point. Now we're at our entry point for account 7, which is the second account that I'm using. And we did not have to trigger in the third account, which is up here. Now these are all significant areas of support, Fibonacci levels. There's a reason behind it. I'm not just blindly doing it. I believe in the overall bull market structure. And this is a way of staying in the thesis of your trade and not taking a big hit on any one account. Multiple accounts are great for this strategy. So we'll see how this works out. I hope it makes sense what I'm doing and it's not too confusing sounding. Let me just summarize real quickly here. And then at the end of the day, I'll show you what ended up happening. It may be that all 3 accounts take a hit. I suspect that that'll eventually happen. But you're limiting your risk per account. Keep in mind, we're using multiple accounts to enter in trades. The second account will not trigger a trade entry until the first one has stopped out. So you want to make sure you're not adding to a losing trade or holding a losing trade. The reason why we're getting into the second trade and the third trade is because the deeper level support levels trigger in a new trade idea. which the whole thing is a trade idea. The 3 accounts is a trade idea, but each level is a new entry point. And so if it succeeds, the first entry, if it were to succeed, the first entry would succeed. It would hit target and you'd make money. If the first entry fails, then it goes to the second entry. You stopped out of the first entry. Now you're into the second entry, which is what you see on my screen right here. We are now into the second entry. First one stopped. Now we're into the second one. If it goes back up and hits target, then we break even. And we break even on the whole trade idea. One failed, one succeeded. We break even on the idea today. And so you can see you can have the maximum risk would be 250 per account with only 3 accounts. I'm not going to do all 5 accounts that I have. So you're not just going to be wasting your time with dollar cost averaging or holding a losing trade. You have your limits set in there. You know exactly how much you're going to lose. You know what your target is. You know what your buy entries areas are, and everything is planned and everything is processed legitimately. So let's see what happens at the end of the day here, and I'll let you know. Real quickly, it's probably important to show that there is reason behind the madness. You can see right here the area of buying for the second account was structure, and let me show you that real quick. As this broke right here, we got out of that trade and we entered into the second trade, which is the one you're seeing. The first one we stopped out right where we entered the second one. And this went all the way down to the new buy zone. This is a sell stop, but it's a trigger for the entry of the third account, which is right inside this golden zone, which is exactly where it bounced. If this third one would have triggered in, we'd be up already in that third account. We didn't get triggered in. It came close. So we're still in the second one, which I suspect this could probably go back up into this range. And, at the very minimum, hopefully break even on the idea today, because it did such a strong drop. Wasn't expecting that, but it's good. Let's see what happens here. Well, I certainly hope this keeps working out. We took a $150 loss on the first trade. You don't have to do your full max. Use structure to determine how much you're going to lose, but don't go more than your maximum daily loss limit. And so if my daily loss limit's 250, but the structure's telling me, hey, I don't need to stay in this trade past this point, then it may be 150, which is what my first loss was. Now the second one, we were up to $100 already here. So if this thing goes up over 150, we won't just break even, but we'll actually start to make profit. That'll cover the first loss. So that's the goal. Let's see again how it turns out in the end, though. Okay, we took a hit on the second one, so 2 of the accounts hit their daily loss limit of around $250. We have the third one that hit a really nice buy zone, and it's going up now. So we will see if right here, this is the third one, stopped us out on that pivot. It swept it, started going back up. We triggered in, and this is the third one, and we are maxed with 3 accounts at $250 daily loss limit, and if that one fails, then that's the cap of the entire loss for everything. And that would be your maximum loss even that I'd ever want to take, is just the 3 accounts. So let's see what happens. Hoping that if this goes back up, we can make half of that back or even break even. So some trades you win, some trades you lose, some trades you break even. We still have yet to see how this is going to finish, so we'll let it play out. This is the last account though, so if it goes down and hits DLL, we're done for the day. I'll let you know here shortly. What are we looking at here? Well, the third trade did good. We hit 1-to-1 target. All right, so we had that $300 full hit target. The first one, that was the second one actually. The first one was a small risk. So you're looking at 450 down and 253 on that one up. So we're down about $200. And it could have easily just worked. It didn't have to go down that far. But once I hit 1-to-1 on this, I didn't want to take a chance and have it come back down, because it is trending down, as you can see. So it's hitting a trend line, it's hitting 50% Fibonacci, and it hits some moving averages And I was like, oh man, I should have took it. That's what happened that over here. And it was up like 200. Actually, it went right back down. I said, oh man, I should have took it. So what I did was when it got back up here, I just took it. If it were to drop back down, I'll probably get back in it. But I'll accept the loss. And I like the style. I like the idea behind it. And I like the idea that I can let it sit all day and let it just move around. And I've got my risk already. It's a lot more comfortable, really. Having the other 2 accounts out of my 5 paid accounts for Apex, I can trade those with the other strategies while these other ideas are just cooking all day long. And I like that too, being able to still trade my scalping techniques with this longer term, bigger risk trade style happening simultaneously. All right. So anyway, I'll talk to you guys later. I hope that makes sense. I hope it wasn't too confusing. And we'll be practicing more and more of these strategies on the channel. Subscribe, click the bell, and I'll see you next time. Peace.